Good evening and welcome to this session of the virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Yesterday, we had a detailed discussion on FEMA. We spoke about person resident in India detailedly. We spoke about current account transaction, capital account transactions, etc., etc. Okay. And we finally stopped near authorized person. As I was mentioning to you, with the liberalized framework currently operating, the Reserve Bank of India has delegated much of its powers to authorized persons. The duty of monitoring inflow and outflow of foreign exchange is now delegated by the RBI to the authorized persons. There are three types of authorized persons. You got the authorized dealer, you got the money changer, and you got the offshore banking unit. The authorized dealers are basically branches of banks, both private sector and public sector scheduled banks, which are mentioned in the Banking Regulation Act. Money changers are licensed by the Reserve Bank of India. Basically, they can be company or whatever, private limited or public limited companies who are engaged in buying and selling foreign currency. Please understand, not foreign exchange. Authorized dealer can deal in foreign exchange, which means authorized dealer can accept a deposit designated in foreign exchange, can issue a letter of credit designated in foreign exchange, can issue a traveler's check designated in foreign exchange. Many things which money changer cannot do. Money changer can simply buy and sell currency. They are usually a kind of service available to foreign travelers who come to India. So when they come to India with foreign currency, they can exchange it for Indian currency, which they can use during their stay in India. When you go abroad, you will find similar money changers are operating right from the airport. You will see the money changers are there, and you could go to them and get your exchange. Money changers could be anywhere, not necessarily in the airport. It could be anywhere, and they would operate. See, there are two types of money changers. We saw that the other day: full-fledged or FFMCs, full-fledged money changers, and restricted money changers, RMC. FFMCs can go both buy and sell, whereas RMCs can only buy. I gave some examples yesterday. I hope you remember. Restricted money changers are usually handicrafts emporia, okay, where foreign tourists come and buy costly Indian handicrafts, and textile showrooms where, again, where we have foreign tourists coming and buying stuff, Indian, clothings, Indian local native garments for their. Similarly, you got the 5-star hotels and 4-star hotels. They will be having foreigners coming in to stay, so they will get a license and so they can buy. So if he pays in foreign currency, he can take it back. But he cannot give back foreign currency. He has to give only Indian currency. Similarly, you can any other type. Wherever there is a need, where that person coming would have only foreign currency, and you can accept it, and you can sell goods to him. So thereby, you need not insist that, you go get foreign currency and all. You can do it directly, and you can deposit it with the bank. And that way you have to keep track. All authorized persons have to maintain elaborate registers as to how the foreign exchange came, what is the purpose, why it's going. They are entitled to ask questions to the client or customer who walks in. Even though he may not be an account holder, if he wants to deal in foreign exchange, the money changer the authorized person has the right to deal. Offshore banking units are branches of banks from India operating abroad. Though they are abroad, they will be governed by FEMA. Something you might want to remember. Right? Now, authorization is given by the Reserve Bank of India in writing, subject to various conditions, including capital adequacy, maintenance of registers, etc., etc., bank guarantee, etc., etc. Now, the Reserve Bank of India has the power to revoke the authority. When would it do that? When it is in public interest to do so. Because when the authorized person has done something which is not in the public interest, maybe he is accepting foreign currency and giving Indian currency for people who are terrorists, whatever, something which is money, he is engaging in money laundering, he is not maintaining proper records, whatever, not in public. It is in public interest to do that. The authorized person has failed to comply with the conditions laid down in the authorization. As I said, they have to maintain elaborate registers and they are subject to frequent inspections. So if in that inspection it is noted that they have not complied or there's a serious non-compliance, then they can revoke the authority. Also, the authorized person has contravened this act or rule or regulation, etc., etc. Now, if you want to do it under 2 and 3, then you have to the authorized person to make a representation. Now, this section 11 gives power to the Reserve Bank to make directions, issue directions. These are the directions that are very, very important. They are called authorized persons direction circulars. Almost all regulations that we have today are APDIR circulars. Whether it is FDI or master circular, all of them are basically APDIR circulars. Authorized person direction circulars. So these are given as directions to the authorized person. But since the authorized person will ultimately put it on our head, we go through them and we comply with them. Because if you want to go to the authorized person, he will obviously say, you have to comply with all these things. So we comply with it before we go there and we tell him. And as I already mentioned to you in my last session, if you want to specialize in FEMA, you should be an expert in this APDIR circulars, latest amendments, whatever may be. Whenever they come, you should be aware of. Some of the APDIR circular contents we are going to see today for export, import, for ODI, ECB and all, we are going to see. Okay. Now, any officer of the Reserve Bank at any time on an order passed by the RBI inspect the business. As I told you, there is a constant inspection of APs and they will verify whether statements made are correct, etc. And the authorized person should provide all the details, produce the books of account and to furnish statements, etc. In case it is there is some discrepancy, the inspector will report to the RBI and the RBI will take suitable action. See, ultimately, authorized person will never want to violate the law. It is the client who will want to do something not in accordance. If the authorized person does not check it, that is his job. He is representing Reserve Bank of India, so he should not permit it. If he has permitted it, then he has to take up the consequences. Or what he can do, I have sent letter after letter, the man is not complying, you take action against him. So he can point the finger to the client and then the client is gone. When we come to export of goods, I will tell you one example, case study example, recent example that I have gone through. So any penalty, any contravention of the directions, there is a penalty of 10,000 rupees. And as you know, if it is a continuing offense, 2,000 for every day during which the continuation continues. Now, quickly to give you a quick glance at the appellate structure, okay, how the appeals are done. Now, what you should understand is, at the lowest rung are the adjudicating authorities. Basically, they are part of an organization called Enforcement Directorate. See, the ED comes within the framework of FEMA, the Enforcement Directorate. Earlier, as I told you, the ED was involved only when there was money laundering or when there was some kind of a, shall we say, foreign currency, coffee posa issue where there was some kind of smuggling coupled with whatever. So the ED also got involved. The customs got involved, ED also got involved. But now what they have done, they have liberalized. So their view is, boss, you comply with the law, I have no problem with you. But even if there is the smallest non-compliance, you are answerable to the ED. So the adjudicating authorities are the EDs, the Enforcement Directorate, in the Enforcement Directorate. They are coming within the framework of the Ministry of Finance, the FEMA, under the RBI control. Okay. So at the lowest rung, you have the assistant directors and the deputy directors who will be responsible for any offense involving an amount of less than rupees 1 crore. How do I decide the amount? For easy, see, suppose I'll give a simple example, you will understand. Suppose you have imported 45 lakh worth of machinery or goods, and when you import goods, the goods will come to the port, and in the port, you will have to clear the goods. clearing, the customs authorities will issue what is known as bill of entry. This is the proof of import. Now, the foreign party might say, most foreign countries, they will say, make the payment and take it. Or open an LC, we will send it, but LC will be closed. So your banker will give a guarantee to their banker. That is called LC, letter of credit. The banker will issue to the banker, by which once the goods are received by you, you will instruct your banker, and accordingly, when the banker presents that, there it will be called letter of credit. For the exporter in that country, it will be called bill of lading. When he puts it on the ship or the flight, he will get what is known as a BL, bill of lading. He would have taken it to his bank and given it to him, and the bank will say LC is there, so they will take the bill and give him the fund. So he will take the money and start manufacturing again. Now the bank will wait whatever period. LC is for 90 days, 60 days. Then on the expiry, they will present it to the Indian banker. Provided the goods have been received by them, then automatically the Indian bank, our counterparty here, your bank, will settle. This is called LC. Whatever it is, every payment which goes out of India, either as an advance payment or as a settlement. Even without LC, you might settle it. Okay, whatever it is. If you are sending money out, you have to show bill of entry for the appropriate value. We will be seeing it in import, but boss, this is not just Foreign Exchange Management Act. This is not law. This is also finance. See, that is why if you want to become a CFO and all, everything is linked. So if your company is importing continuously, there are so many things you have to do. One of which is MEMA compliance. So continuously, there should be a bill of entry matching. So the bank will keep on tallying. That is the bank's job. The bank will keep on tallying. Suppose you made an advance payment for 45 lakhs. Equivalent INR, whatever euro it is, whatever dollar it is. Equivalent 45 lakh INR. You send it out. Now, the goods have come. But the bill of entry value is for 30 lakhs. Now 5 lakhs short. You have sent 45, got 5 lakhs short. This is an offense. It is an offense where you have sent money out of India for which equivalent value has not been imported. Straight away, offense. For that, you should either give a reason or you should give the money back. Again, Forex now. You took the Forex, give it back, matter closed. Whatever. You should close it. You should say, okay, when he supplied, he only supplied so much. Balance what I have paid, here's the refund, you send it back. He has sent it back. So the money has come back, no problem. Some type of closure should be there. 45 lakhs are better still. Let us say 7,000 euro. 7,000 euro should get closed. Suppose I got only 5,600 or 6,000 euros in, the balance 1,000 and odd euros have to be closed. Somehow, either get the money back or get the goods. Everything should be in writing. So if the authorized person is taking everything in writing and still this is not rectified, then during inspection, he will raise his hand and say, Baba, I have asked him in writing, he has given this nonsense reply. Still, he is not bringing that money back. You do whatever you want. Now the RBI will take action on you. The ED will call you for he will send a notice to you and you will have to provide due proof. If you are not able to give sufficient proof, then they will levy what is known as a penalty. For certain offences, even imprisonment, like in the Companies Act. Whatever it may be, if you are not satisfied, if you are not happy with the order of the adjudicating authority, then you can go on appeal against the order of the adjudicating authority to a guy called Special Director Appeals. Please understand, this Special Director Appeals is within the RBI format. He is not outside of Reserve Bank of India. He is not outside of the FEMA. It is well within that. Just like, if you remember your Income Tax Act, when you are not happy with the orders of the Assistant Commissioner or the Deputy Commissioners or the whatever additional and all, you go on appeal against them to the Commissioner of Income Tax, appeal. Similarly, here you go to the Special Director Appeals, right? Who will hear your matter? Then he is a quasi-judicial body. Okay? He is a quasi-judicial body. Quasi-judicial body, you are going to see tribunal. I hope in the next class we will talk about tribunal when I will explain quasi-judicial body. See, quasi-judicial bodies are like a court, but not a court. They are not bound by the elaborate procedures applicable to a court, but they have to follow the principles of natural justice. They have to give a reasonable opportunity of being heard, and they have to pass a they have to pass a speaking order, right? Whatever it is, you are not happy with the order of the special director, let's hold it. In the meantime, suppose the offenses were more than 1 crore, 1 crore and above, then the order will be passed by the boss of the assistant directors. That is the director himself. Now remember, the director and special director are at the same level. Against the director, you cannot go to the special director. So you have to go above. So against the order of the special director or against the order of the director, you go to the appellate tribunal. For foreign exchange appellate tribunal, that is called the fiat. Okay. So there again, see, the time limit is given, 45 days. Again, from special director to director, 45 days, etc. And within that 40, of course, all these bodies have power to condone the delay. A suitable cause is shown. They are expected to complete the appeal within 6 months. Okay, preferably. Okay, but as soon as possible, but within the period of 6 months. Now you are not happy with the appellate tribunal also, then you have to go against it to the High Court, jurisdictional High Court. So depends if you are go to Mumbai High Court. 60 days. There obviously you cannot go. I mean, chartered accountant cannot go. You will have to hire an advocate to file a case before the Honorable Mumbai High Court. That will go on. Then against the High Court, Supreme Court, blah, blah. There you will get into the bigger ocean called Civil Procedure Code. CPC will start applicable to you. That's it. That is not for you and me. That is for lawyers to handle. Okay. Now, Mr. Banda, okay, Mr. Unsatisfactory. His name itself is unsatisfactory fellow. Brother of one Mr. Banda. Banda, I think we met him in the residential, residing at Chennai. Is agreed by an order made by appellate tribunal. Desires to file further. How to do that, Okay, that's all. It's a state theory question. Similarly, there is something called compounding. Now, we have already discussed compounding many times in Companies Act. What is compounding? Compounding is a method by which when a person has been charged with an offense under any act, whether before being the prosecution proceeding starting or afterwards, at any time, if that gentleman or lady wants to get out of it, they can apply for compounding. The application should be made to an appropriate authority who will try to decide whether you are worthy of compounding. You have to pay a compounding fee which is more than the penalty. Please. But why you will pay it? Because where a contravention has been compounded, no proceeding or further proceeding shall be initiated or continued against the person. He will be noted as acquitted. So, just link it, my dear friends, with Schedule 5. Suppose you want to appoint somebody as an MD under Schedule 5. He should not have been convicted under any offense. You remember those 19 laws? FEMA is one of those laws. Friend. So if under FEMA there is a violation and this fellow is convicted for, say, 5,000 rupees penalty, gone. He cannot be appointed under Schedule 5. Thereby, in an era of loss or inadequate profit, he cannot be paid even salary, Baba. So you have to be very careful. That is why. So if you keep on asking me, sir, why should I compound? The amount is more than the fine. Yeah, it will be 3 times, even 5 times the fine. Why? Why we will pay? Because remember, this gentleman is going to become MD of a 2,000 crore company. Yeah? Hello, if you want to appoint it, but jolly will go for compounding. That is the best advice we can give you. You don't go for compounding, then if he is convicted, gone. You remember? Link this with Schedule 5, then you will understand. Okay. Compounding is a process. Okay. Now, any contravention under Section 13 may be compounded. Good news. Any of the classes of who you go to, any of the classes of the ED people, Enforcement Directorate, and RBI can act as compounding authority. When you should go within 180 days from the date of receipt of application by DI, DE, or such other officers of the Directorate of Enforcement. Okay. So you send an application for compounding within 180, the Directorate of Enforcement should compound. If not, they won't. That's all. That is their choice. But usually, boss, when you go for compounding, they're more than happy because prosecution is a pain for them also. So you make an application to the most of the offenses under FEMA all the offenses are compoundable. That is why when a client comes and I find that it is too late, fellow has committed the offense and come, then we make him sit in the conference room, explain to him what has gone wrong. Then, sir, who made the mistake is not my problem. I am your auditor. If you are your current CFO, then sack him. If it is the earlier CFO who was now not there, nobody can do anything. Offense has happened. Now what to do? Solution. Go for compounding. That's all. Okay. Compounding is available. You take the route, pay the fee, go home free. That's all. What more can we say? Keep on arguing, nothing can be done. Why should I do? Why should I do? Then don't do it. Sit at home, go to jail, whatever you want to do. Okay. Now, so this completes one portion of FEMA, which is called, you might ask me, what is the logic of this, shall we say, 2 slides? Why am I having 2 slides? Okay. Not because I like it. I could have had it in a single slide and continued also. But I'm doing it because, sorry, I'll change the date. Last time I took was in August 21, obviously. Okay, this is December 22. See, there are 2 types of parts of FEMA. One is the law, the Act, Foreign Exchange Management Act. The other is the regulations. Regulations which are APDIR circulars. So now we are going to see the regulations. Okay. Some of the regulations we are going to see. Various regulations we are going to see. In the meantime, I have got one query, very, very lengthy query from Mr. Shailendra Singh. Let me see if I can understand it. If I can understand, I will answer. Citizen of India left India for employment in USA on 1st June 2022. See, this question, Ram is a citizen of India, left India for employment in USA on 1st June 2022. So, Ram purchased a flat for rupees in September 2022. Now, under which category will Ram come? Person, he was up to 1st June 2022. That means what? So, April, May, in the previous year, we have no information about previous year. We have no information about 21-22. We shall presume that he was in India throughout that year. And so, therefore, technically, he is a resident. Till 31st May. 1st June, he leaves. No, he purchased. No, he left India for employment on 1st June 2022. So, on 1st June, what happens? He will come under that category. Now, so, did he reside in India during the immediately preceding year? Yes. But did he leave India? Did he leave India during the current year? Yes, he has done. Therefore, was it for the 3 purposes? Yes, employment. So, he is a PROI for financial year 22-23. So, on 1st June 22, he purchased a flat at New Delhi. So, PROI cannot purchase you remember alteration of a immovable property in India by a PROI is a capital account transaction, but permitted. Just for your information, I'm telling you, as per the guidelines, it is permitted. But still, it is a capital account transaction and it requires approval of Reserve Bank of India. Okay. And his brother, Mr. Gopal, employed in New Delhi, also purchased a flat in the same building for 15 lakh. Mr. Gopal flat was financed by a loan from HFC for which our man has given a guarantee. Both the transactions are clearly capital account transactions. How I would answer this question is, define capital account transaction, then say, talk about residence of Mr. Ram, define capital account transaction, say that both the transactions are capital account transaction. A person resident outside India requires specific or general permission of the Reserve Bank of India for entering into a thing. Therefore, Mr. Ram is advised to approach the authorized dealer and obtain permission through the authorized dealer for entering into these transactions. This is the answer. I would humbly suggest that you should write. Okay, sir. I hope you have understood. In case you are happy with the answer, please give me a response. Otherwise, further doubt you ask, we will see what it is. Can Schedule 1 offense? Mr. Baumik, brother, what is Schedule 1? It is not an offense. It is a prohibition. Cannot be compounded. It's a prohibition. But then what does it say? All offenses under FEMA? Yeah, see, again, when you're going for compounding, they will ask you why you did it. You should also agree not to do it again. So many of these are, yeah, agreed. To answer your question straight away, when you have done something which is prohibited, you can still go and ask for compounding once. Suppose you keep on doing it regularly and every time you go for compounding, they'll kick you out. They'll say no. So please note it, my dear Baumik ji, compounding is not a right available to you. It is a power given to the enforcement directorate. They want to compound, they will. They don't want to compound, they'll kick you out. So theoretically, yes, you can get it compounded. But practically, once okay. If you make it a habit and keep on doing it, sorry, sir, you may not have even. Okay, so that is not your question. Is can it be? Answer: yes, it can be. Okay, sir. Yeah, guarantee given is a capital account transaction. If you remember, okay, how it is a capital account transaction, maybe it is my mistake. I should have explained it in slightly better way the other day. I'll show you. My mistake. It is my mistake. I will explain to you in slightly better way. While defining capital account transaction, there was one small thing that I didn't stress. Usually I would have stressed it and I would have given this transaction itself as an example, which I did not do. My mistake. Now I will do it. What is that? Thanks for asking this question. Do you notice one thing? Assets or liabilities in India of a PRI. Assets or liabilities including contingent liabilities outside India of a PRI. I'm sorry. Yeah. See, this guarantee is being given by a PR. See, brother, PROI. First of all, you notice one thing, the word contingent liability. Guarantee is a contingent liability. So that this part talks about a PRII giving a guarantee for a loan taken abroad, which I should have stressed. Please note it. Where a PROI is taking a loan and a PR.
Recording in progress.
So therefore, PIOs are eligible to buy. They don't have to get any approval from the Reserve Bank of India. That section is mainly for only the foreigners who are trying to buy land and etc. in India. There is a provision. Otherwise, person resident in person of Indian origin can buy. That is anyway permitted. As rightly pointed out by you, see, guarantee given, is it a capital account transaction? It is. Provided it is given by a person resident in India for a loan taken by a PROI outside India. Because a PRIA is creating a contingent liability outside India. That is a capital account transaction. 100% requires permission. But the example given here is reverse, where PROI is giving a guarantee for a PRIA loan. So that is not covered. Okay. Hope now it is clear. Good. Yeah. See, this is how knowledge is shared here. Am I correct? Good question. And I think this question must have been asked in the examination. Am I correct? Because the dates are so near, 22 June and all that. So, or maybe it was asked in November exam. I don't know. Maybe. Okay. So I have given my answer to the best of my knowledge. Friends, here I'm going to make a point, which I always make. Some students get angry and bored with me also when I make this point. Because most students, especially CA Institute or anywhere for that matter, I've noticed, they want an answer. They keep on saying, give me an answer, give me an answer. Agreed. Given the nature of the subject, by and large, you can give a correct or wrong answer. You can say this answer is correct, this answer is wrong. Per the law. But always it may not be possible, especially in law. Because it is, thank you, Mr. Shailendra, for that. So, what happens now? There are gray areas. Law is ambiguous. Not only is the law ambiguous, sometimes you can even argue that the law is wrong. The be careful. You can't say the law is wrong. You say there is an anomaly in the law. There is an ambiguity in the law. There is a disconnect between the intention of the legislature and the words of the section. You already studied this in intermediate when we went into a topic called interpretation of statute, where the courts will take a decision. So something like so. Why I'm saying now, sometimes when there is an ambiguity in the question itself, forget law. Law may be clear. The question may be ambiguous. Our great exam paper setters will give a very, very ambiguous question. In those cases, how do we distinguish between an intelligent student and a good student? Okay, that's easier. Intelligent student. How do you say who is intelligent? Intelligent student will think. If there are 2 points of view, he will write both. This is where that so-called smart student who wants one answer will be in trouble, because he will choose one and he will go with that and live or die with that. Whereas an intelligent student will, like I used to always, when there is a possibility of an alternative, I will say in the alternative, this could also be an answer. What is wrong? After all, examiner is reading, let him take the decision. Yeah, you are giving both of us. Thereby, you are clearly showing the examiner that you are aware of the law in depth and that you are capable of having both points of view. That is a far better achievement. That is one level of knowledge, high level. Sir, I got first class, always class first in school, sorry, correct. But once you come to a professional course and later on go for a professional life, whether in service or in practice, you cannot expect black and white. Nothing is black and white. Everything is a shade of gray. Operating within the shade of gray is the real talent of a, which is what you are trying to equip yourself to become, not merely pass the exam. Passing the exam, okay, go beyond that and think. Then, okay, sir, that's why I said people get angry with me when I talk like this. In fact, one student very rudely even put a comment once, stop talking unnecessary things like that. What a Guru Bhakti, I thought, that's okay. But point is different. What do I do then as a student? Good question. Write both the options, yeah. Write both the points of view. Why not? Even in casting, Baba, marginal casting, in one of my papers I have written. I did in one method. Then I felt that this could be interpreted the other way. And I did in another method also. And I said both the methods come to the same conclusion. But there are 2 approaches. Kindly see that. And I have taken both the approaches like that. Of course, my casting mark is something totally. I got 72 in casting. Okay, that is not the point. The point I'm making is you can. Nothing wrong in giving 2 answers. Don't go through life expecting black and white, good, bad, right, wrong. No. If you expect that, you will be very disappointed. That much I can assure you. Okay? Good. Now we move on to our next topic, which is export of goods and services. Okay? Now, export of goods and services comes under current account transaction. Before we even go there, now think like the Reserve Bank of India. Don't think like you, don't think like Srikanth, ordinary citizen of this country. Think like the Reserve Bank of India. What is their concern? Their concern is, if goods are going out of India, they should be valued correctly. The high value goods should not leave the country as low value goods, and thereby India should not lose the foreign exchange. It's a concern. Valid concern, sir. From the RBI perspective, for example, you are exporting gems. The value of that gem is 2.5 crores. You are undervaluing it and putting it as, for example, not you, sir. Sorry, not you. Jeweler is putting it as 2.5 crore worth gem, putting it 1 crore. It's too much greed. 1.5 crores. Balance 1 crore, what will happen now? I'm explaining this to you. Only then you will understand this unnecessarily clerical provisions will become clear once you understand the concern of the Reserve Bank of India. So, gems going out of India, 2.5 crores. But in the bill of lading, in the invoice, it is very clearly going to be mentioned as 1 crore. Fraud. What is trying to happen? Valuation. They are lower value. What happens now? 2.5 crore worth of value goes out of India. It goes to Amsterdam or wherever it goes. It goes to Europe. There somebody takes it. Now he owes me how much? Not 1 crore. He will pay that money correctly. It will come. See, when this type of thing is happening, now the money will come correctly. 1 crore, 1.5 crores will come correctly. Equivalent euro will come correctly. The balance 1 crore gems will be now part of the underworld, where it will start moving for things. So the money will be given to me in cash. and I will take it. Or they will, okay, what will I do with cash? So they will open an account for me in Switzerland and they will send it to, see, from Europe, nobody is going to ask any questions. So it will go to my Swiss account and it will be waiting for me. There will just have one password. That's all I'll have. And I will just go to Switzerland. Not me again. The jeweler will go to Switzerland. See, when it comes to enjoying, I'm saying me. When it comes to punishment, I'm saying you. Did you notice that? Okay. So the point is that jeweler will go to Switzerland and he will go to the bank, go to that and take that money, do whatever he wants, enjoy, and send that money from there to Cayman Islands, whatever. Okay, enjoy. Are you able to see what's happening? Friends, this is one aspect of PMLA, money laundering. But this is easily routed. Money laundering is the easiest route. There are other more and more tougher methods of doing money laundering. This is the easy method. Reverse also possible. Import. If export of goods I'm doing undervaluation, import of goods I will do overvaluation. Now the goods coming in will be of lesser value, but the money going out will be more. There again, it will be kept in credit for me somehow, Benami transactions. It will go to some account. This is what you have to understand. See, this is the real fear. 1. 2, genuinely I have sold the goods. But now what I want to do, I don't want to get the money back. Quietly, I tell you, send that you are insolvent and you send me some notice or something, say I can't pay, I will write off. Then that money you give me when I come to Amsterdam or when I come to Venice, you give it to me, quietly put it in my pocket, I will run away. Enjoy. Cash. Or as in the usual route, Switzerland, Brunei, Cayman Island, wherever you want to go. Antigua, where our friends Modis go. The point I'm trying to make is, this is the fear. If that is the fear, this is the law. So, every exporter of goods services shall furnish to the RBI the true and correct material particulars, including the amount representing the full export value. Or if that is not ascertainable, the value which the exporter, having regard to the prevailing market conditions, expects to receive on the sale of the goods in a market outside India. So, goal is valuation. The value should be correctly given. Along with that, they have, so which means every invoice for export of goods and services should be routed through an authorized dealer. And it should be, the money should be collected through an authorized dealer. Friends, you will tell me, sir, I will not go to authorized dealer, sir. I will directly export the goods, sir. And I will post the invoice, sir. No problem. Money will come now. When the money comes, the authorized dealer only is going to get it now. He is your banker. You will go and ask him, sir, I exported goods, sir. I am expecting NEFT payment. Have you got it, sir? Yeah. How much? 23,000 euros should have come. Yeah, we have got 23, but then after bank charges and all, we have got about 21,500 euro. Yes, what do you want? No, give it to me, sir. Why I will give? I will not give. Why? Because when did you route that invoice through me? What is this money? I don't know. For me, it is in husband's account. You understand how it's kept track? So you have to go and give that invoice for collection, or even at least when the money comes, he will have to match it against that invoice and then credit your account. Till then, it will not be credited into your account. It will be kept in Bombay or wherever central account is there, where they'll keep all that money and they will give it to you only when it's, see, suppose you have got a good export documentation division, those fellows will quietly go to the bank, give that invoice, bill of lading, etc. And the bank will keep it, even if there is no LC. And then when the payment comes, they'll match it against the invoice, bill of lading, etc. And they will close it. That's all. Then when the RBI inspector comes, he will ask, what are all the pending invoices for export? They'll give him. Then you keep on seeing. So any guy who's more than, they'll catch. This is the point I have to do. So this is very much directly linked with you as a chartered accountant because of the financial implications of these things. Okay. So principle operating here is that the true and correct value of the goods should be realized and repatriated into India. Okay. So now they are given. In case of exports taking place through customs or manual ports, every exporter of goods or software in physical or any other form, please note, either directly or indirectly in any place outside India other than our friends Nepal and Bhutan, shall furnish to the specified authority, in this case the authorized dealer, a declaration in the form set out. For software, it is Softex. For goods, the invoice has to be given. That's all. Where there is no form specified, then the exporter may export without furnishing any declaration, but shall be liable to realize the amount of foreign exchange which becomes due or accrues on this account and to repatriate the same to India. Friends, realize means to collect. Repatriate means to bring it to India. Okay, so whenever we talk about exports, we are talking about realization and repatriation. Now, so all invoices, when you send it outside India, the foreign exchange should be realized and repatriated to India. That's what we say net foreign exchange. Why we say net foreign exchange realization? Because when I am receiving money from abroad now, all these Shylocks, the bankers in between, they'll take a pound of flesh. When some money is going through them, they will take something and only send it off. They'll take something and only bring it in. So whenever money moves, these fellows will take charges. So literally, they are basically in Venice in those days, the bankers were Jews. Am I correct? The bankers were Jews. And that's why there was a huge hatred for the Jews right up to the Merchant of Venice, where, even in Elizabethan times, there was a general feeling of hatred for the Jews as being very mercenary. Jews means the people who originally were from Israel. Okay, they are called Jews. And so they were not J-U-I-C-E, what you drink, J-E-W-S, Jews. Okay, these people were moneylenders. And they were. So all these bankers basically were Jews, including, I tell you, this guy was a Jew, what is that fellow? One of the greatest rich men in New York was wait his name. He's a Jew. And so all of them are Jews, and they used to run the whole world economy, finance. So they will take out some money out of it. Therefore, if you are invoiced for 23,000 euro, chances are you won't get 23,000. You will get something little less, say 21,500, 22. Depends. You have to just track it, right? Plus, in your books, in accounting perspective, you will again compliance with accounting Ind AS and all that is there. How you will account it, when it comes back, recognition of any exchange income or loss due to change in fluctuations, all that. Good. This is one version of a subject, my dear friends. Foreign currency transactions or foreign trade and related financing issues. I have run a 2-day workshop along with very, very senior Reserve Bank of RBI, retired RBI people, bankers, myself, couple of chartered accountants from corporate. Together we ran 2-day workshop. It's a complex subject. We covered FEMA, we covered LC, we covered finance. Everything was covered. So it's a big version of a subject. One aspect of which is your knowledge of FEMA. Okay. So exemption. Trade samples of goods and publicity material supplied free of payment. So you are sending it to show him what you have. So you want to export beautiful kalamkari saris. No problem. He wants to see quality. Sample. Clearly marked. No need to repatriate. Personal effects of travelers, whether accompanied or unaccompanied. Travel abroad. I'm coming back from foreign country. No problem. No need. I'm taking it out. I'm bringing it back. No problem. There's a limit, of course. You can't take. There is based on customs also. You cannot take as much as you want. There's a limit. Based on customs, you have to see. You can't just like that take anything you want. Be careful. So suppose you're taking some stuff as personal effect and then selling it there. Chalo yaar, that's your problem. But there's a limit to what you can take, how much you can. Suppose you're taking some rare Nataraja idols from your personal antique collection and you want to sell it in France or in London, in Sotheby's, then whether customs will catch you first of all, because you will be coming under a different law. You will be exporting rare artigraphs, antiques from India, outside India, you cannot take. Even if it belongs to you, you cannot take it out of India. You have to get permission from the archaeology department. So they will ask you. First of all, they'll ask you. Many people have caught like that on the airport with the idols, and they will the police will come and catch. Then the customs wala will come. Then finally FEMA fellow will come because they are the violation there also. Ships, stores, transshipment cargo, and goods supplied. So ship is coming into the port. They are having stores. Food that they have to eat, that will be kept in the storeroom. And there will be cargo which is not going to be offloaded here. It is going to go directly out. So those cases, so that will also be going out of India. There will be a documentation for that. But it's not sale from India, so we don't have to bother. right? And goods supplied under the orders of central government, etc. Defense issues, exempted. By way of gift of goods, accompanied by a declaration by the exporter that they are not more than 5 lakh rupees in value. For example, you have a friend in Vienna, Austria. I used to have a friend, a pen friend in Vienna, Austria, where you want to gift her a silk saree. No problem. Great. So you want to give her a costly silk saree, 65,000 rupees. Chalo, no problem. Okay. So you buy it and you pack it up and put clearly declaration, and export it. No problem. No need to repatriate. It's a gift. Similarly, aircrafts are aircraft engines and goods imported free of cost on re-export basis. See, I am importing it free of cost. Maybe I am going to do some further work on them and then I'm going to again re-export. Okay. So, friends, up to now what you have seen is for you and me outside of the zone. We are in the domestic tariff area. Now G is an exemption for zones where they have set up special economic zones, STPs, free trade zones, where the purpose of that zone itself is freely import goods, manufacture or convert and export, re-export. For example, jewelry. In Chennai, we have a huge jewelry park where in MEPS, Madras Export Processing Zone, there's a separate jewelry park is there, where silver or gold will be, mainly silver, I have noticed silver will be imported. Then it will be converted into chains based on designs and again re-exported back to Germany. Such cases are there. Those cases, okay, already the zones are free. If you import and re-export, you will be controlled by the zone. You are not bothered. Still, when you are exporting, you have to give proof. Then you have to see, repatriation is applicable to zones, right? But where you are importing goods and re-exporting, then in a zone, then it is exempted. Where its goods are found defective, they are being sent out, re-exported for replacement, or we have received them from them on a loan basis and we are returning back, and where you are getting it from foreign suppliers free of cost, found surplus after production operation, sent back. This is happening only in zone. See, only in zone, you can import free of cost, without duty, manufacture and take it out. Okay. So this is more of a zone-related issue. Okay. Now, replacement of goods exported free of charge in accordance with the provision of foreign trade policy in force. You can do it. Goods sent outside India for testing, subject to re-import. See, this is where you have to be very careful. While sending it out for testing, you would have given the declaration, blah, blah, sent it out. Everything that went out has to be re-imported back into India. This is all small issues where we'll get trouble. And this is an area where you as a finance person have to be very thorough with the technology of your company. See, you can't simply be ignorant of your technology. You should see what is the part going out, what is the testing happening, and when it will be re-imported. You should be in touch with the operations guys. Okay? Defective goods sent outside India for repair and re-import. All that. Export permitted by the Reserve Bank on application made to it. Okay? Now, you should indicate what is known as the export exim code, it's called, import exporter code. See, please remember, FEMA, RBI, one group. There is somebody called the DGFT, Director General of Foreign Trade. That fellow is a separate guy. He is the guy who gives subsidies and all that. He is the guy who gives import duty drawback. All that is done by the DGFT. Then you got the customs wallas. Are you able to see the complexity of international trade here? Foreign trade and international trade. But it is again a specialization area. Okay, it's a fantastic specialization area, but you cannot, there is no certification course for it. Immediately some student asked me, sir, is there any certification course? Can I do that and then get directly into specialization in foreign trade and all? Sorry. What you should do, your job itself should be there initially. Then slowly you should grow. And as you grow, you can start acquiring certifications, which will be very relevant. You can become authority on those things. Especially, see, just the LC is there now. That is one version of a topic. Letters of credit version. You can be authority on it. Obviously, once you get into that type of a niche area, you cannot do anything else. You will be an authority in that area. Foreign trade, that's all. You will be directly. So you might ask me, what is the scope for that? Huge scope at the higher level. For example, many companies will be specifically searching for a guy with that expertise. Salary, no bar. There, no problem. Come, whatever you say. But what were you getting earlier? Okay, chalo, 50-25% more. Come. No need to waste time. Start doing your job. Because we need a guy who knows export. Because we are exporting 3,000 crore export company. Suddenly our Forex guy is gone. I need a plug and play guy. I can't train up a guy from the lower level. Maybe there is a guy who is getting groomed, but that fellow cannot handle this. So you have to come and join. Or, sorry to give this career counseling, but see, you don't think like that. Most of you want to get certification and job. No, sir. Experience and job. So have the relevant experience, you'll get the better jobs. And so if you are the second in command for that guy who ran away, and if you have acquired that knowledge by then, your bosses will say, the board of directors will say, no, why go out? This fellow is there promoting. That is your talent. How you have acquired your knowledge, how you have been groomed, have you been a good chela, have you learnt properly? If you are arrogant and keep on irritating that fellow, he will not teach you. But if you are good, if you are a good chela, you sit with him, he will teach you and you will learn. I know this is all unnecessary and absolutely out of your thing, but think like that, okay? After you clear the exam, think like that. This is the secret of becoming a successful chartered accountant in life. Okay, clearing the exam, any donkey like me can clear and get rank, That is not a big thing. Okay, after that only the challenge starts. Okay, coming to the point. So exim code has to come. Then you have to give a declaration in form EDF. You have to supply it to the Commissioner of Customs. Then that Commissioner of Customs will forward it to the Reserve Bank of India. And he will give you one duplicate form. Please note, to whom are you giving it? To whom are you giving it? To the, I'm sorry, I know this is not a regular class where I can ask you a question and you will give me an answer. But one sec. So you are giving it to your good friend, who is the authorized dealer? The banker through whom you are dealing. That fellow, you have to come and give this. Now you understand the link? He will keep track. But believe me, my dear friends, sorry to make this very bold comment. Most of the bankers are not doing it properly. They are also equally bad. Some banks are good, some banks are bad. Private banks, some banks are good. Public sector, some banks. Otherwise, they will make a mess. And in that mess, we will have to go. So better you be clear with your documentation. Any paper you give to the donkey, get it acknowledged. Get proof. Send it by email attached. Send the original proof. Acknowledge. Sign karo, lejo. Don't touch it unless you sign my acknowledgement. So that is the rule you should put in place in your organization. Okay. For software, same logic for Softex. But there is no customs and all that. There it will be STP. Because the Softex will be from an STP or an FTZ. And there you will have to do. Okay. Again, it will come back to the bank. Through the Reserve Bank of India, it will come to the bank. Now, on the realization of the export proceeds, the duplicate copies of EDF and Softex shall be retained by the ADs. This is very, very important. This is one cycle. You exported it, submitted EDF, got the money, close. Cycle. When the RBI comes for inspection, they will see that for every invoice, this cycle has been closed. Okay. So, some evidence has to be given. There is all documentation, as I told you. There will be a separate department for this in large export houses. It will be done by a group of fellows would be specialized. But unfortunately, that fellow will know in and out on transaction level. So the fellow will not be a chartered accountant. He will not be a qualified. But he will know in and out. In fact, if I am auditing that company now, my people will be more closer to this guy who will be able to give the data faster for audit. Okay. Only when there is a discrepancy, we will report it. Otherwise, it will be closed. Well-maintained export documentation division, matter of 2 minutes, 2 days, 24, 48 hours, I can complete the audit. Complete everything. Because this period, what was the export? Tally, duty drawback, close, everything closed. Tally, total P&L account, tallied, IT tallied, that's a matter over. No need for further. If you want to make 2 article clerks sit and take the invoices, that is your choice. But overall, everything is paka. We have seen everywhere it is coming correctly. Beyond that, if Hawala is going, how you will find out? This is a bigger thing. Outside of the documentation, it's happening. That is very difficult. That you have to have a different approach. So, the amount representing the full value, very, very important. This is very, very important. Okay. From exam point of view, this is very, very important. The amount representing the full export value of goods, software, services exported shall be realized and repatriated in India within 9 months from the date of export. However, where the goods are exported to a warehouse established outside India with the permission of the Reserve Bank, the amount representing the full export value of goods shall be paid to the authorized dealer as soon as it is realized, and in any case within 15 months from the date of shipment of goods. See, we have a client who's got fantastic business in US. Almost everywhere their products are displayed in the retail shops, right? But the quantity that each retail shop will take now will be very less. See, at any retail shop, he won't give huge orders. Retail, na? But they have a chain of retail shops across the eastern board at least, okay? And some parts of Central and Western America, where they are. Only Walmart, even Walmart is trying to get connection. They are also supplying some portion of Walmart's total need, okay? Now, for doing all this, every time they export from India, it will take time. So what they have done, they've taken an RBI permission through the authorized dealer, and they've established a warehouse outside India, and they're transferring the goods to that warehouse. At that time, when it goes, no buyer, my warehouse is taking it. Then from that warehouse, we will sell. The local retailers will get it. They have their own vans that go and deliver. Then they will pay. The whole cycle should not take more than 15 months. So 9 months plus another 6 months, 15 months. By then you should bring it. Either you at the time of realization or 15 months from the date of shipment of goods. Of course, Reserve Bank may, for a sufficient and reasonable cost, extend the period of 9 months or 15 months as the case may be. Friends, extension of period is very, very important. What you should know as a chartered accountant future is that RBI has the power to extend. So, if your invoice will not be collected within 9 months, please report it to the AD well in time so that he can apply to the RBI on your behalf for time. Give sufficient reason. Why? Maybe say that something is there, this problem, that something, give the facts and ask the Reserve Bank of India generally will permit you. Within that extended time, you get it. If you don't do that and you don't collect within 9 months, you're gone. It is a penalty. It is an offense. You understand? Okay. So, this is the documents pertaining to export shall be submitted to the authorized dealer within 21 days from the date of export or date of certification. So, by now you know the pattern now. It's a correlation. Again, the authorized dealer may accept the documents after the expiry of 21 for reasons beyond the control. There's a boss, pandemic is there. So many reasons are there. Okay, you give genuine reasons, no problem. But idea is keep it going. Don't keep it pending. Have a group of people who are engaged in this activity and it's part of the process. Okay. Got it. So I'm going to move on. Now, no person shall accept the permission of the Reserve Bank or subject to the directions of the Reserve Bank or permission of an authorized dealer, do or refrain from doing anything or take or refrain from taking any action which acts the effect that it is collected in a manner other than the specified manner. It is delayed beyond the period specified. Okay? If the full value of export is not received. Okay? Now, we already seen this. When there is a delay, then RBI has the power to punish you. Okay. Now, some cases, what happens, you might make an advance payment. Where an exporter receives advance payment from a buyer or third party, you should make the shipment of goods within 1 year. Okay. 1 year you have to make a shipment. The rate of interest, if any, payable on the advance payment does not exceed the rate of interest, which is the LIBOR, London Interbank Offer Rate, plus 100 basis points, right? Sometimes, when he's giving an advance payment and you are delaying, okay, from the date of his delivery. See, you have to ship the goods within 1 year, but he may not give you 1 year. Now, the buyer may give you only, says 2 months. And if you go beyond that, he will say you have to pay me interest. That interest cannot exceed LIBOR plus 1%. That is 100 basis points. Okay. 0.01 actually. LIBOR plus 0.01. 100 basis points. That is 10%. That is 1% of 1%. 0.01. The documents covering the shipment are routed through the authorized dealer through whom the advance payment is received. The documents covering the shipment are routed through the authorized dealer through whom the advance payment is received. See, this type of trapeze activities, if you do now, for example, you ship the goods through one dealer to an authorized dealer. Payment is sent by advance payment is sent through another authorized dealer. Both the transactions are hanging. Both the fellows are in trouble. Both the ADs are in trouble. Both will point to you. You will have to go before the ED and give all the reasoning. Suggestion, be careful. Agreed. I'm just skipping a little because most of it is, no. Bharat Computer Hardware Limited received an advance payment for export of high-tech hardware to a business concern in Singapore by entering into an export agreement to supply the hardware within 6 months from the date of receipt of advance payment. The shipment of hardware was made after 9 months, and the documents covering the shipment were routed through an authorized dealer through whom the advance payment was received. Examine whether Bharat Computer Hardware Limited has discharged its obligation with the provisions. I think you know the answer, right? So within 1 year, you have to ship it, though you have shipped beyond 9 months. But suppose for that extra 3 months, you are going to pay interest. That interest cannot be more than LIBOR plus 100 basis point. Okay. Is it possible to receive advance payment where the export agreement provides for shipment of goods within 15 months? No. Answer, no. Because you have to ship within 1 year. But be smart. What you should do, in this case, it is not permitted by the regulations. But you can always go through the authorized dealer and get a special permission from the Reserve Bank of India. See, as far as FEMA is concerned, always remember, nothing is impossible. If you are reasonable and if you are commercially correct and you feel that you need more time, specific exemptions can be created. Nothing is written in rock here. But you can't presume that you will get an approval. No. But before you even receive the advance payment, go to the AD. Tell him, this is going to be more than 15 months. I cannot ship it within 12 months. Kindly tell me what to do. Immediately he will say, let's go to RBI. Specifically, RBI will say, how long you will need? 15 months. Okay, take another 3 months, 18 months, you bring them, ship the goods, come back to me, close it. That's all. Matter over. Also identify the maximum rate of interest paid. I think you are familiar with that now. So wherever there's a need, the Reserve Bank of India can give directions. Okay. Exporter shall, prior to the export. Okay, that is very, very important. Before you export, before you make the advance payment, please be clear. What are the time limits? Why I am being so careful? Because FEMA is a very, very easy law. If you comply, you have no problem at all. But if there is a slightest problem, you will go before the ED. And the ED, almost the same power as CBI. They will always suspect that you are doing something illegal. So even a very normal transaction will be viewed with a lot of suspicion. So don't go there at all is what I would. For a clerical mistake, for some stupid mistake by a Munimji, don't go to the ED is what I would humbly suggest. Where an export of goods or services is proposed to be made on deferred payment terms or in execution of a turnkey project or a civil construction contract, the exporter shall, before entering into any such export agreement, submit the proposal for prior approval of the approving authority, which shall consider the proposal in accordance with the guidelines issued by the RBI. Right? In case of guarantees required to be given, the same may be issued by an authorized dealer. See, AD is giving guarantee to a foreigner. So you get permission from RBI and do it. Okay. So this is the exports. Now moving on to import. Now let me see if you have any questions. Thank you for agreeing with me. Good. Okay, balance 1 crore PMLA, correct. Yes, 1 crore PMLA, not PMLA. Even under FEMA itself, you are out. If it is discovered, FEMA also is a violation. Plus PMLA also. PMLA will be an investigation, bigger one. FEMA directly penalty. If it is, but the problem here is, I have given you the scenario. How will it be found out? Because who is the only man who can find it out? The customs wala who is sending it out. If that fellow is doing nothing, then nobody can catch him. So we have to take exempt code from DGFT and then submit it. The minute you want to do export-import business, like PAN, TAN, exempt, GST, everything is one shot. Yeah, starting up a business, exempt. Exempt is a permanent code like PAN or TAN. I think somewhere there's a doubt that it is some kind of a transactional code. No, exempt is a identity. Like for if you are an export importer, you will have an exempt code, single exempt code, which will be quoted everywhere. Yeah, then EDF form to authorized dealer. No, EDF to the customs fellows. Then the customer will give you one copy, which you will give to the AID. Got it? I think it's clearly there in the slide. Later on, you look at the slide. Yes, exactly, Boniji. See, the RBI is interested in ensuring that outflow of foreign exchange for interest should not be very high. That is a goal. Correct. See, now import is the mirror image of export. So here the concern is the value of goods imported only should be paid and that value should be clearly mentioned. Okay. So we have seen that these are the general guidelines. The same. AD may allow remittance for making payments for imports into India after ensuring that all the requisite details are made available, including purpose. You cannot simply say, I want to import narcotics, I want to import petroleum jelly for making bombs and all. You can't do that. They'll ask you, what is it? Is it for a bona fide trade transaction, etc.? They can ask you any question. You cannot say, free country, you cannot ask me. So don't even question them. They are entitled to ask. Authorized dealers are like Reserve Bank of India. The minute he takes on that hat of an authorized dealer, please do not treat him like a banker. Remember that he has the power of a Reserve Bank of India. And he can reject the transaction. He can report you to the RBI. Okay. Whenever you are acquiring foreign exchange, it should be utilized for the said purpose. Many times what will happen, no foreign exporter will give Indian company credit. Sorry, this is the reality of life. Not only India, most of third world countries rarely get credit. They will say, send me a NEFT or TT. In those days, it was called telegraphic transfer. Now it will be whatever it is, FT or funds transfer or whatever it is. By SWIFT, there will be a separate code. That again is a part of international banking, okay, where it will go through banker to banker. So they will say, send it, right? So you are a company manufacturing petrochemicals. You need to import hydrosulfuric acid, H2SO4. It's available in India, but still you want to import it. It's cheaper in China. No problem. So the Chinese guy says, you want a container of H2SO4. This is the price. Blah, blah. We negotiate, squeeze his balls, and we say, this is what I'll pay you. You go there, fight with him, and finally you get a rate. Then he will say, pay. Then only I'll pack. So you will immediately inform your finance guy. He will go to the bank and he will give the application. Form A2, and that automatically, it's a current account transaction, freely permitted, no need for any approval. Straight away, the banker will ask only one thing: please give me pro forma invoice. So you'll be sitting in Shanghai or in Guangzhou or whatever, and you'll be getting this pro forma from that guy and scanning it or faxing it to your finance guy. Immediately, your finance guy will produce the fax inmates. That itself is enough initially. Based on that, they will release the funds. They will send the SWIFT code. There's a specific code for this. They will send it under that code only to the Chinese bank. And the Chinese banker will immediately instruct his client. money has come. That's it. Now money has gone out of India. What they are saying, equivalent value of goods have to be received in India. Why did you take this money? Why did you acquire for? Please note the words used here, my dear friends. They are not saying taken. They are saying acquired. From where? You acquired it from the Reserve Bank of India. Fine, through the AD. But do you remember my comment? The forex belongs to the Reserve Bank, to the country, not Reserve Bank, country. You are acquiring it for the purpose of making the payment. Now you have to import the goods. Exact value needs to be imported. The pro forma invoice amount was sent now. That amount of goods should come. Bill of entry should be produced. The evidence of import is known as the bill of entry. Something should be there again, that there is an import of goods. Most of the time it is called bill of entry. Sometimes if it is coming through courier, the courier slip. Customs assessment certificate, there is a bill of entry. The customs will give you what is known as bill of entry, which will contain the manifest details. It will contain the value, quantity, inspection. Customs would have given the customs duty that is paid. Proof of payment will be, everything will be there in that. And that is all done through online. Nothing is paper. Today, the customs department is completely online. They became online long ago. As early as 2006-07, I remember, I conducted a workshop for Ashok Leyland where I brought the customs commissioner himself to come and give a lecture. They were shocked. Because they never expected that. I knew that through a contact I went, I said, can you come? Okay, Shrikanta, you are calling me as an academician. I will come not as a government servant. He came and he gave a lecture. And I also told very clearly, you should not take up any controversial issue, even as a doubt. But they also agreed. But when he said, I know these issues are there, he also gave some suggestions on how they can do and all. They were very shocked. I'm shocked and happy. They said, never has this type of training been given to us. Because basically, knowledge is knowledge. What do you say? Everybody wants to share knowledge. And so he also was a teaching mode that day. He was happy. He also told me, first time in my life, I got the opportunity to visit a person, not as a potential, offender, but as a student. And I taught them. Okay. So the money should come only through authorized dealer. Or, okay, you can make the payment through international card. Okay. Or as prescribed by RBI. Boss, cards are all okay, but remember there's a limit on what you can swipe through the card. If you want to send more than that, you have to go only through banker. Okay. And you have to make only SWIFT payment through EFT, electronic fund transfer. Okay. Chalo. These are all methods of making payment, which you are quite familiar from your finance subject. Okay. Now, payments are usually made in Can I make it in Indian rupees? Yes. To a non-hold time director who is resident outside India and is on a visit to India for company's work and is entitled to payment of sitting fees or commission or remuneration. So this guy has come for attending board meeting, non-executive director from abroad. Maybe you got a Stanford professor as your non-executive director. Fellow comes to India. Okay, here, take the money. Not in cash, check to his transfer to his Indian NRO account if he has one, or if he's a pure foreign citizen, then however he wants it. But in Indian rupees, why not? Of 3 years from date of shipment, not more than that. Okay. When there is a delay in payment, you will pay interest now. Maximum 3 years, right? But you have to make the remittance within 6 months. I'm sorry, from date of shipment. Deferred payment arrangements up to 5 years treated as straight credit, where you have a 5-year deferred payment scheme. Go through that scheme as per the procedure laid down in the master cell. Okay. So this is a case where he is sending the goods to you without payment. You make the payment. Then within 6 months. Of course, AD can consider granting exemption of time up to a period of 6 months, beyond that 6 months. Maximum up to 3 years, irrespective of the invoice value for delays on account of disputes about quantity or quality, etc. Okay. This is one thing where I'm not able to understand why they are bothered. If I'm able to delay, they should be happy. But I think somewhere it is the image of India also is there. Now, see, suppose you buy goods from a foreigner and you don't pay, the image is lost, right? That's also there. Because tomorrow, the Minister of Foreign Trade is answerable for that also. When the Minister of Foreign Trade goes there, they will ask him, say, most of you Indian companies don't pay. What can we do? Why should we supply? So then he has to give a reply. That is why they know very well our fellow will not pay. So they ensure that you give the money, take the goods. That is the usual terms. In South India, we say, if you want to eat dosa, put the money in my hand, take the dosa in the other hand, go. That is the best credit policy ever. Okay. So this is regarding extension of time. Okay. Where you are not able to bring within any of these categories, you always go to the regional office of the Reserve Bank of India. It will be in one of 4 regions. Kolkata, Bombay, Mumbai as you call it now, Delhi and Chennai. So whenever there's an extension of time for payment or receipt, then the bill of entry extension should be mentioned, and the date up to which the extension is granted should be informed to the customs authorities. Okay. This is import of foreign exchange. You cannot import foreign currency, etc. into India. So you go abroad, you meet your friend there, you go around, enjoy. Then he says, here's $50,000, enjoy. You keep it with you. I love you so much, take it. Sorry, you can't bring it. Get caught. Don't do it. You tell him, please keep the money, send it by NEFT to me. I'll take it. There, if he sends it as a gift, you will not be covered under FEMA. When he is sending it, when you are sending it, remember Schedule 3, up to 250,000 is there. When he is sending it, it is not covered under FEMA. It is covered under FCRA. When I come there, I will teach you. Don't worry. Okay? It is covered under FCRA. When you are receiving gifts from a foreign source, you will have to report it. Or up to one limit, you need not report it. Okay? Good. Everywhere, see money coming in, money going out, foreign exchange constantly monitored. Don't think, oh, sir, it's only a gift. I will take $1 million. What is your problem? $1 million you are bringing. What are you doing? We want to know what you are doing with that money. Okay. So when we come to FCRA, I'll explain it more. Why FCRA basis, we will talk about it. At that time, you will understand why the government of India has the right to ask you why that fellow is sending a gift to you. There, you can argue. Some of you are very smart. You will argue, sir, you only told foreign exchange belongs to the country. So I am bringing 1 million foreign exchange. Like that. Not like that. Okay, going on. So a person may send into India without limit foreign exchange in any form other than currency notes, bank notes. So through bank, any amount. Okay. If so long as you are bringing it through an authorized dealer. Okay. Currency note you cannot bring into India from any place outside India without limit foreign exchange other than unissued notes, subject to the condition that such person makes an arrival in India a declaration to the customs authorities. Okay. Bring. Good. Declaration, if you make it, you're out. Yeah. Maximum you can bring in $10,000 maximum if you want to. You're not more than that. Yeah, you can see that. Provided further that it shall be necessary to make such declaration if the amount brought in by such person at any one time does not exceed $10,000. So no problem. Enjoy, bring 10,000 at a time or its equivalent. Okay. And at the aggregate value of foreign currency notes alone brought in by such person at any one time does not exceed $5,000. Same applies reverse also. You want to take out also, you can take $10,000 out. Okay. So you can take out as traveler's checks, bank notes, currency notes. Currency notes alone 5,000. Okay. Value of foreign currency notes alone should not exceed 5,000. Total can exceed 10,000. Actually, they are very liberal. Up to 10,000, you take it. Yeah, no problem. They won't. They don't generally question. You declare it and you take it. Any person resident in India who has gone out of India on a temporary visit may bring into India at the time of his return from any place outside India other than Nepal and Bhutan currency notes of Government of India up to an amount not exceeding 25,000. Note it. You are coming back from Europe. Why are you bringing rupees? So you would have taken out. Now, maximum you cannot take more than 25,000 and bring it back. Or if somebody is giving you rupees, then cannot be more than 25,000. Okay. Of course, from Nepal or Bhutan, you can bring 100 rupees. Currency notes of Reserve Bank for any amount. See, this is you. When you go, you will take now. That is allowed. Bring back that. More than that, you cannot bring more than 100 bucks from Nepal or Bhutan. Fantastic. So here we go with, we have almost come to the ODI, which is fantastic. So let's move on. We already saw this term, overseas direct investment, ODI. Before we go, if you have any doubts, you can ask me. Of course, we still have to do ODI and then we have to do ECB. So you have to do that. It's pretty lengthy. It's not simple, but friends, once you understand the basic principles, law becomes simple. And remember one more thing. Institute material will have a lot of stuff. If you read everything, you cannot remember everything. So what you should do, you should read granular parts. For example, in the topic that we have discussed, which is the granular part, 9 months, 1 year, these are all granular. They are all having some connect. No, mostly your testing also will happen only there. So read around that and be thorough is the point. Okay. ODI, overseas direct investment. Suppose in the early 80s, when I was just studying for my CA, so I can say 85. Okay, the early 80s, I was in school, mid 80s, 85, 84, 85, doing my articles, 86, intermediate, 87, final, completed. So the articles completed in 87, 86, then 1 year, 86, I did my articles, then 86, 87, I did my industrial training. Almost 21 years completed in January. I became a chartered accountant in July. Okay. So that was in 87. Now, around that time, suppose somebody were to talk about investing outside India, we will all laugh. Because what we learned something very fundamentally, boss. +2 economics, first year, +1 Indian economics. First chapter, reasons why India is a poor country. That is a question, standard question. In the quarterly exam, standard, give 6 reasons why India is a poor country. Straight away. We'll muck up 14 reasons. Depending on the book you are reading, 15 reasons, 25 reasons are there why India is a poor country. Indian economy, poor economy. So how can a poor economy go and invest in foreign country? We are happy if the white man comes and gives us some arms and throws some money in to us, we'll catch it and run away. India International Monetary Fund, all these fellows, and our successive governments were happy to receive such, charity from foreign countries and be happy because India is a poor country. This is the story. But what happened? India became a poor country. Finally, we became a beggar country. We became an insolvent country in 1990. That is when we realized that the path we are taking, so-called socialism, and everybody should be equal rule, was not working as we thought it is. On the other hand, with the socialism, the poor were getting poorer and the rich were getting richer. This is the period which saw the emergence of Dhirubhai Ambani. This socialistic system created Dhirubhai Ambani, not liberalized system. It was not that Dhirubhai Ambani started his business in 90. He started in 80. It was in 80s that he was ruling the roost. Okay, Dhirubhai Ambani. Okay, when it's about Dhirubhai ji, point I'm making is that people who knew how to tweak the system made money. People who only wanted to get a quota and get freebies and get government jobs, they were becoming poorer and poorer. Whereas people who went into entrepreneur, professionals, they were able to go forward and become rich. So the system was rewarding people who are entrepreneurial. who knew what the overall purpose was. So 90s became the compulsion. You could not do anything else. We had to enter the free market. You know that story I told you. When Manmohan went to the International Monetary Fund, we liberalized, we welcomed foreign direct investment. FDI started flowing because while India is a poor country, India is also a huge country. And we started creating an upwardly mobile consumers who are willing to buy foreign goods, who are willing to buy showy branded products. So there's a huge market here. So we put conditions that if you want to sell motor cars in our country, you jolly well employ our people. You set up factories. So the engine was started and it went off well. And successive BJP government also did well, if you may say so. Till of course, the global financial meltdown, which is an international phenomenon. But we didn't suffer so much in that. We quickly managed to come up again and we started back. All this was possible and foreign exchange started flowing. At one stage, what happened? Earlier, we were starved for foreign exchange. Now, we found that we are having so much foreign exchange. What to do with it? So the Reserve Bank of India said, hey, I'm holding. Earlier, what was foreign exchange belongs to me, money belongs to you, now becomes a problem. Because what will they do with the foreign exchange? So they told exporters, you keep it. I don't want it. You do whatever you want. The exporters said, what will I do with it? You take it. He started selling. And the dollar further started going up and so on and so forth. So the point I'm making is the RBI was in deep shit. What to do? And so they decided, chalo, what do you want money for? Okay. Then some people started thinking, right, what I can do. There are so many opportunities abroad. See, around this time, the European countries went for a disastrous experiment called the EU. See, already they were economically useless. Post-World War II itself, they were economically useless. They were simply being controlled by the United States. So they knew. So there was so much opportunity abroad for setting up business. Seriously. The first mover advantage, of course, to our great Ratan Tata, who went to England. And not JLR. Before that, he had Chorus. A steel manufacturing company called Chorus was acquired by Tata Steel and Tata Group. And they started running the company, Chorus. And of course, it was a disaster. But whatever learnings Tata got in Chorus, they corrected it in JLR. When they took over Jaguar Land Rover, they knew what mistakes they had done in Chorus and they corrected it. But the point is, and this is only one example I already gave you. I can give you a number of examples of how Indian companies wanted to go abroad. And this is not talking about the software guys. The software guys were a different success story altogether. The Silicon Valley kings who went to Silicon Valley and set up. So these guys came back. But of course, most of the time, software bought us only FDI. Because the software companies basically were trading on a different story, which was Indians were intelligent, but they were not asking for that type of salaries. If you had a European or if you even hire an Algerian, he was asking more. When he comes to San Francisco, he's asking more. Whereas when he's sitting in Nagpur or in Chennai or in Hyderabad or Bengaluru, he says, no problem, pay me, I'll take. More than happy, Dora, like that. He takes the money. So there was a huge disconnect. And that was traded on by these companies and said, we will outsource your projects to me. I'll get it done in India and I will send it to you. And it was all online, so it could be done, blah, blah, blah. So that was a different success story. ODA was where manufacturing companies understood that India is becoming difficult to manufacture. Labor, the same logic of IT company, reverse in labor with unions and all that. It's so difficult to control. Better go somewhere else, manufacture and directly sell. I have got so many foreign customers. Why manufacture from India? I'll manufacture it from maybe Sri Lanka. I'll manufacture it from some other country and I will export. So since the RBI had so much money left, they said, hey, come to me, bring the project. If it is good enough, take it. But I will monitor you. Keep giving me quarterly financial statements. Keep showing me that you are able to, whatever money you took out, you try to bring it back to India 4 times, 5 times. We are happy. Go. Chal, do some business. So this is what happened. So overseas investments or financial commitment in joint ventures and wholly owned subsidiaries have been recognized as important avenues for promoting global business by Indian entrepreneurs. You take 100 examples, Mahindra and Mahindra, Bajaj, you name all the big shots, they've got manufacturing facilities outside India. Okay. Joint ventures are perceived as a medium of economic and business. Why not Japan? Of course, nobody wants to set up business in Japan because it's highly. But Japanese collaboration companies setting up business in other parts of the world common with Indian collaborator. Japanese and Indian collaborators going outside of India. So many examples. Okay. So it's a great way of making money. So in keeping with the spirit of liberalization, which has become the hallmark of economic policy in general, after 45 years of being fools, that is what makes me very angry. 45 years of foolishness. Okay. You have now realized in 90, too late is what I would say. If only we had changed right from 47, all these stupid policies, the socialism, then today we would be better than some of these countries. Yeah, 100%. When I go abroad, blood comes from my eyes. When I see some third world countries, who are less than us, so well developed, like Korea, Taiwan, small fellows, yeah. Business doing what they're doing. We with so much went into all sorts of giant sector, public sector, government owning. No. So, of course, that is still a long way off privatization, and it's a very, very difficult topic. But liberalization, no problem. We'll give you free. Okay. Earn more money, and so that we can become more corrupt. That is the logic. So, in keeping with the spirit of liberalization, which has become the hallmark of economic policy in general and foreign exchange regulations in particular, the RBI has progressively relaxing rules, right? So, direct investment outside India means investments either under the automatic route or approval route. So, there are many industries where it's automatic, like software and all, where you don't have to get permission. But most other industries are still approval because money is going out, right? Now, what you can do, you can contribute to the capital or purchase the existing shares of a foreign entity by buying it in the marketplace, which is what Tata did for JLR. So they bought the shares, existing shares. Zain was a Kuwait-based company whose African operations were acquired by Airtel, Bharti Airtel. Again, by stock share, sale of stock, whatever. But remember, this is called direct investment. It does not include portfolio investment. Today, you can do portfolio investment also in a limited way. What is portfolio investment? Instead of becoming an owner of that business, you will only be holding that security as an investor. For example, you want to buy shares in the Nasdaq, you can. Today, you are permitted. Okay, through a SEBI-recognized broker, you can do that. Okay. But the money involved is very high. You can't, if you got 10,000 rupees, don't even bother. Please come. Okay? You need more money to go there and take the risk, buy the quantity, you will have to. Then you go there, you can buy. No problem. So that is called portfolio investment. Okay. So this is also possible. The limit on ODI is prescribed by the RBI in terms of indirect investments. Now there's an automatic route. Any financial commitment exceeding $1 billion in a financial year would require prior approval of the Reserve Bank, even when the total foreign contribution of the Indian party is within the eligible limit under the automatic rule. Please note the eligible limit. This is granular, very, very important. Very important. Within 400% of the net worth, paid up capital plus free reserves, as per the last audited balance sheet. Not defined in FEMA, so you take it from the Companies Act. Free reserves. Okay, not that is available for declaring dividend for 400% of the net worth, PC plus FR. So you take PC plus FR, multiply by 4, and you will get the amount which is the limit. But even then, any financial commitment exceeding $1 billion would require prior approval of RBI, even when the total FC of the Indian party is within the eligible limit under the automatic route. So, what is my learning from this slide? Very, very important learning is automatic route 4 times PC plus FR. Suppose you are going to invest 4 times only PC plus FR. No problem. Go ahead. All you need to do is go to an authorized dealer, inform him. He will send the money at his risk and he will monitor you. But if it is going to be more than that, then you have to go to the RBI through the authorized dealer again. Friend, that you don't even go near the RBI directly. Reserve Bank, if you go into the Reserve Bank, there will be one computer. They will ask you to type in purpose. You will say, I want to send ODI. So immediately contact your nearest authorized dealer. Bye. Send you out. You have to go to the authorized dealer. Then he will give you the form that ODI, this regulation, he'll give you free of cost. He'll give it to you. He will ask for an email ID, send the PDF format directly. Then he'll say, this regulation has the form ODI. Just fill up the form ODI income. Then if you are not a chartered accountant, if you are a client, if you are a businessman, you will go to your auditor. That is when the matter will come to us for the first time. Fellows will not know that so much financial data is there. They will the money and starting business. They will make him sit and say, Anna, this is ODI. Please come. You'll have to do project and all. Give me projection, 5 years projection. What are you going to do? How are you going to earn profit? Why, sir? I will take later. Sorry. RBI is going to allow you to take Forex out of India. So you have to give. So suppose the total is less than 1 billion and within 400%, then no problem. But if it is exceeding 1 billion, then prior approval of RBI is needed, even if it is within the 400% limit. Be clear with this, because again, smart student will think granular, not try to mug up everything. He will think, what is the crux of the topic? Know that well, go for the exam. It's my suggestion. Sincere student will read everything. I am being careful. Smart, sincere. Smart student, understand, crux, learn, go, write, become, pass. Sincere student read everything. Time is not there. I forget it. Then crux may be forgotten. Then the crux will come in the exam. He will not write correctly. That is the problem. Okay, this is my humble submission to you. Don't take me otherwise. Don't get angry with me. Okay. Some students will get very angry and they will put comment and all like that. Don't put. I'm sure Aniket will not put like that. Aniket is a nice gentleman. Let us see what he wants to ask. Europe plus 1 divided by 1 and China divided by 1, pushing India towards manufacturing. Agreed, sir. If as a general comment, I'm with you totally, sir. Totally. Europe plus 1 and China plus 1, pushing India. Yeah, we should. Long ago, we should have done. Our enlightened Prime Minister gave us the slogan, Make in India. So we should do that. Okay, coming to the point. The Indian party can invest up to the prescribed limit of its net worth in JVOS for any bona fide activity permitted as per law of the host country. The prescribed limit vis-a-vis the net worth will not be applicable when the investment is made out of balances held in the EFC account. Do you remember our EFC? Exchange Earners Foreign Currency Account. Means you are an exporter, you have got the money, instead of taking it out as Indian currency, you are asking the bank to hold it in the EFC account in dollar. See, this was the first thing they started doing. When the RBI realized that they're having more than they need, they immediately told the bankers, you encourage this fellow to hold it in EFC so that we don't have to pay interest. Let him pay. Let him lose the interest like that. Friends, think about it. You are going to become very, very successful chartered accountant, I know. And this is a very stupid calculation. Boss, dollar is going up every day, ma. Suppose I take the dollar now or I keep it, which is better. Like that, people started thinking in those days. So we said, let's hold it in EFC account. But suddenly they discovered that stupid dollar can also go down. Yes, I will make our finance minister very happy. Indian rupee can also strengthen occasionally. Okay. And when that happens, who is the loser? EFC fellow. Therefore, people stopped. In fact, this happened very frequently in the last decade because India became very strong. Okay. We were very strong, especially with the IT industry booming. We were very strong and we were able to handle. Okay. Then thanks to this global financial meltdown, again, we have gone back. Okay. So the point I'm making is EFC account, if you have money, use it directly. You don't have to get anybody's permission. It's your money, take it. It's only when you want to come to me, I'll not ask you. Or you go there, you convince those buggers to give you money through ADR or GDR, American deposit receipts, global deposit receipts, whatever, go, you get it. And you will, if they give you the money, their own money, get it from them, invest it there, no problem. That is called GDR, ADR. Fantastic. Good for you. Okay, but the amount again, see, ADR, GDR, there's a separate regulation, not covered by you. For you, it is there. It is FDA regulation where ADR, GDR is there. Amount is huge. Yeah. You can't say, sir, I need 2.5 crores. Can I go ADR? You can't. Don't even bother. Talk about $20 billion. Let's talk about it. Okay. ADR, GDR. Okay. So the Indian party is not on the RBI's exporters caution list. List of defaulters to the banking system circulated by the CEL, RBI and other credit information. So all that is part of the game. The Indian party routes all the transactions relating to investments in JVWS through only one branch of an AD to be designated by the Indian party. This OK branch is very, very powerful. Slowly they are moving you there. You can't have multiple bank accounts, single bank. Because people like Nirav Modi, multiple banker. They will do one fraud here, run away another bank like that. They were cheating the banking system. Okay. So the Indian party should approach the AD with an application form in ODI, also folded hand. And if you are wearing a turban, you remove it, tie it around your hip and go to that fellow and stand there with an application in form ODI. Then he will go through it. Once he is cleared, he will go to the Reserve Bank, get the approval, straight away it will go. If it is an automatic route, no problem. Otherwise, he will take it to the RBI. Most cases, RBI will approve. Okay. This is again, I told you now, FEMA is a very, very lucrative area. This is one fantastic area where somebody wants to go for ODA, they'll come to you now. You will be doing the forms. It's a fantastic consulting activity. You can charge like mad. One time supplying, filing, everything and to the ODA. I'm not guaranteeing getting it. Okay. I'll follow up with the AD also. In case there is any error in what I have done, I'll correct it for you. But why I can't guarantee, this fellow may have other problems that I can't do. On the documentation side, I will take care of you. Okay. Minimum 2.5 lakhs, 3 lakhs, you can charge. Straight away. And they pay 1 lakh advance, then only I'll touch the paper, then go as we go. Finally, ODA approval comes, balance amount, go, run, enjoy. I will enjoy, you enjoy. Okay. So, but see, if you want to do that, you should become ultimate in ODA. So, ODA is not a big thing. Yeah, they will ask you simple questions. Yeah, like what are you going to do there? How much money are you taking? What is the project cost? What is the marketing approach? Revenue model? I mean, standard, which anybody will ask now. The government is asking. You have to give. That's it. Which the entrepreneur rarely wants to answer. Sir, I am an entrepreneur, sir. You give me money, I will do it. Sorry, that cannot be done. You have to give a business plan. You have to show a revenue model, cost, all that. All irritating things you have to tell us. Very difficult. Okay. Approval route for direct investment or financial commitment outside India. You have to get prior approval of the Reserve Bank for all other cases. Okay. Again, the RBI will not prevent you. Today in the liberalized world, the RBI will be a consultant for you. Find out whether there are any good things, whether you are making a mistake. See, you might be making a mistake and losing your money. They will prevent you from doing that. 2 times I have prevented a JV with a foreign company because when the foreigners came to meet us and we met them in a hotel, I don't know how many of you know, I'm also a psychologist. I have a master's in psychology. So when I went with my client, I was just talking to these guys and then after they went away, we came back, they went to their room and then we came back. I went to a local Sarana Bhavan where we have coffee and I told, hey, come on, let's go and have a cup of coffee. And I said, are you serious about entering into a relationship with these guys? Yeah, Srikanth, why, what is wrong? I said, please think 100 times. I'm so, proof, what do you have proof? I said, come on, I'm a chartered accountant. I know I'm talking casually, but I'm not talking as a chartered accountant, no. Talking as a psychologist. I'm saying these guys are not telling the truth. It so happened, my client became alerted. And usually what happens now, these guys, when they meet a foreigner, they believe everything because generally in India, we have this feeling, Gora, white fellow will not tell a lie. Right? 200 years being slaves with that fellows, we think if the white fellow will not tell a lie, how can he tell a lie? He's wearing suit. And even like that, we have got this standard practice. So once I alerted him, my guy started asking all the tough questions. They didn't have answers. And they started getting angry. They started threatening and said, if you don't, you lose like that. Then I said, see, then you come. Then my client also agreed. Srikanth, thank you. This is not a good idea. Then 6 months later, he got a better counterparty with whom he set up that business and it went off very well. And they are happy. Okay? Please don't ask me, sir, are you then telling that all chartered accountants should become psychologists? No, but it's good to be aware of people and their behavior. Don't be a blind chartered accountant without any awareness about body language, the tonal variety. Be tuned to that. This is what you learned when you did your advanced MCS program. See, the institute is giving you a total holistic program.
Remember, some of you, when you attended that MCS program, would have been very irritated. But don't get, because that talent which you are acquiring now is the real talent for which you're going to be paid high amounts by your MD or your board of directors or by your clients. Okay, the amount you will get for this knowledge, filling up forms, malas, will be a pittance when compared to the amount you will get for giving consulting advice, for giving such, intuitive suggestions. And if you are successful, then you are in demand. Okay. Approval route for direct investment or financial commitment also. Therefore, under the approval route that is not covered by the automatic route, prior approval will be required. Okay. Okay. I'll do one thing. Friends, this is a fantastic opportunity for me to call for a small break. Right? I'm also a little tired. After the break, we'll go through ODI, ECB, and close. Right? Fantastic. Nisarji, can we have a break? Welcome back from the good break. I hope you had a cup of hot chai. It's for your information, just like a pilot would give you the weather report. I give Chennai is undergoing heavy rainfall. Last about the whole day was heavy rains, and but luckily nothing happened. We worked. Most of our offices are working, and luckily everybody is back home, including my son who just drove in and parked and he's now at home. So everybody is home and it's raining heavily, just for your information. Okay, moving on with our session. Moving on to a resident individual, means not company, a resident individual, single or in association with another resident individual or with an Indian party, satisfying the criteria as per Schedule 5 of this notification may make overseas direct investment in the equity shares and compulsorily convertible preference shares of a joint venture or host outside India. So this is a new idea which has come, not very new, but earlier individuals were not allowed. Now individuals are also allowed. So this is again within the overall limit, right? Prescribed under the provisions of the LRS, Liberalized Remittance Scheme. See, what happened was, there were many, people who wanted to set up companies in US and all. US, Singapore, Hong Kong and all that, you see. So where they said, okay, chalo, you want to do it, go ahead and buy, you invest into the equity shares of a wholly owned subsidiary outside India, whatever. Okay. Now, again, that is stupid. Now, how an individual can have wholly owned subsidiary, whatever it is. So the point here is, the limit is the LRS limit. So long as within the LRS limit, they say, do whatever you want. Go ahead. Of course, you can't do it without knowledge. You have to go through the bank, AD, and quickly fill up the form and all. He will allow you to go. But it goes through the LRS. Okay. So this is the kind of solution we can give once in a while. Chalo sir, you go ahead, because individual we cannot see the 4 times and all that. So we'll say, go ahead. Up to the LRS limit, you take it out. Sorry. Indian parties are prohibited from making investment or financial commitment in foreign entity engaged in real estate or banking business without the approval of RBI. So once, if you want to do, you can, you get RBI approval. Okay, overseas entity having direct or indirect equity participation by an Indian party shall not offer financial products linked to Indian rupee without the specific. That is, you cannot take your money outside India and then bring it back to India as a financial product. If you want to do that, go through the RBI route. Not only the Reserve Bank, our friend SEBI will also come in. The minute you get into the market, SEBI also will come in. General permission has been given to persons resident in India for purchase of securities out of funds held in RFC account as bonus shares and existing holding of foreign currencies shares, because how can you prevent a bonus from coming to you? And when not permanently resident in India out of their foreign currency resources outside India. Okay. So we move on to another very interesting and important topic, which is external commercial borrowings, ECB. You notice one more thing? We are going through the balance sheet. Means we have finished. If you have done FDI, you would have finished share capital and shareholders funds. Then ODI, non-current investment is over. Now debt, non-current debt, non-current liability, ECB. Okay. So link it to the balance sheet also. Why I do this? Again, finance link, financial reporting link. Everything has a link everywhere. Okay. Professional knowledge is like that. There is no siloing, and it cannot be a silo. You cannot say, Mr. Srikanth, teach FEMA, don't talk anything else. Very difficult. You can't say, separate the heart, nothing else should come out. It's not possible. Okay. So you want to borrow money. Be careful, you cannot borrow money otherwise than through the ECB route. This is something that I'll give you one more input. Since I have a little more time today, I'll give you some more inputs. We do a lot of work, just like most medium firms do, I'm sure, all over the country, especially in Mumbai more than us. We get a lot of referrals from foreign companies because early stages, I did a lot of work for foreign companies through foreign bankers. See, whenever a foreign company comes to a foreign banker, usually they'll come for opening an account, but their intention would be to do business in India. So the foreign banker generally would know how to advise them, but they would prefer somewhere they would say, go to a chartered accountant. So it so happens I had a couple of good friends in foreign banks. My students were there. So they used to refer them to me. So initially it started, then slowly the snowball effect, then a lot of people started coming on referral, etc. And so invariably they come. Singapore, Finland, Spain, Canada will come foreign. Usually they land up in India and they'll go, it'll be a big thing. First there'll be a Zoom. Those days no Zoom and all, email. Then he'll say, I'm coming to India. Can you come and meet me? So surely I'll come and meet you wherever. Chennai means I'll go. Mumbai, I can't handle him. I'll send him to somebody else. Chennai, I'll go. Chennai, many of them came to Chennai because they wanted to, automobile ancillary units for supplying to Ford and, the foreign manufacturers in India, IT companies, other guys who wanted to set up facilities, services in India so that they thought it's a good market. We can come in and sell goods and all that. They come. So when the minute they come, it's a big consulting meeting. I charge for it. First meeting, you come and sit with me 2 hours. I'll give you complete inputs. Charged. Straight away, pay the fee, go, they pay. Pay the fee, go. They pay. I send an invoice, pay. Advance, then come and see. Sit, we'll talk. Or I'll come to your hotel, hire a boardroom, I'll come and give a presentation. No problem, whatever you want. So we do that. First thing I'll tell them is, boss, form a company in India. Invest into it through FDA route. It is easier. Better than starting a branch in India. Because branch in India cannot do many things. Whereas branch in India cannot acquire property. Branch in India cannot, only limit. You can only sell, buy, manufacture. And manufacturing also you cannot do. Because to manufacture, you need to build. You can't buy. So the minute you want to expand, you can't. So maybe if you have a rented place, yes, maybe. That's all. But it's very difficult. So form a company in India. And then we do that. Then invest. Now comes the issue. Any money coming from abroad into this company can come only in 3 forms. It can come as income, which means you are controlled by exports. You remember we saw that. You export, get money. Anything goes out of the services or goods. The rules are that. It comes through, no problem. Goods, services, 101, 102, no problem. Go ahead, enjoy. I will account it. Income is accounted in India. We have no problem, etc., etc. Or else FTA, share capital, for which there's a clear document trail. You have to go to the bank. First, you have to provide online. You have to get a unique transaction number, UTN. Money comes in. Based on the UTN, you make an application to the bank. They through inform FCGPR. They clear it. Then only you make the allotment. After you make the allotment, again you inform them. Then money comes in. That gets adjusted. They issue what is known as a BRC. Okay, inward remittance certificate, which is very, very important. BIRC, which is a very, very inward remittance certificate. Every foreign exchange inflow into your company, into your bank account, needs to be supported by a BIRC. Or the last method is borrowing. So suppose the foreign company, the owning company, whose WS this fellow is, they send money without even asking us, they will send foolishly. And what it is, the banker also foolishly will allow the money to come. And he will allow this fellow to take it also. Then he will ask, what is it? What is it? Where is the FCGPR? I said, what FCGPR? Fellow, this transfer. Sir, you can't do that, sir. You have to comply with ECB. What do you mean ECB? That fellow doesn't know ECB. Yeah? He thought it's a holding company transferring to subsidiary company, account transfer. No, sir. That is a loan, sir. As if we don't know. Now he'll come and start educating. Sir, there is external commission. So first time when these guys come, I tell them, boss, no transfers without my knowledge. You either bring it as sale, or if you want to do borrowing, if you are a foreign company wanting to give loan to your subsidiary, no problem. But you have to go through the ECB norms. Sorry, this sounds silly, but that's how it is. Everything comes through ECB. Simply, you can't go abroad, borrow money and come. No. Or you can't tell, please lend me money. Some Jew sitting in Amsterdam lends you money. You can't borrow. You have to go through the framework of raising loans through external commercial borrowings. Again, the reason is this. You borrow, India borrows. Am I making sense? When an Indian borrows, India borrows. Ultimately, in foreign exchange, we have to repay, boss. You will bring the foreign exchange as a loan. Ultimately, who will repay? By then, the forex value is going up, Baba. Today, you're getting it at $1 rate. When you repay it, it will be another dollar rate. We are losing. Not you. You are losing. We are losing. So, we want to monitor it. How much are you borrowing? What are your terms? What is the total cost of borrowing? All-inclusive cost of borrowing. So, this is the justification for control on borrowings. Okay. So, they said external commercial borrowings. Means, when you are borrowing for commercial purpose, it is called ECB. Non-commercial purpose, no borrowing allowed. If your brother wants to lend money, it has to come as a gift. That too, FCRA. Again, I'll tell you when you come to FCRA. Okay, I'm taking loan from my brother, sir. No, sir, you can't take a loan. That's all. You are not ECB. Where you will get? You can't get an ECB from brother and all. Can't get. Of course, now they have liberalized it. Recently, I went through this borrowing circular. Person of Indian origin can give a loan from abroad. PIO. Though he is a person resident outside India, can give a loan to close relatives. That's all. So, brother allowed. They use the word blood relative. Okay. Very close relatives, you can give a loan. Okay. That is allowed. So, don't worry. You can borrow from our brother. Not a problem. But other than that, no. You can't go to Amsterdam, meet a guy, Jewish banker and say, please lend me. Yeah, why not? 40% interest. Take it. Enjoy. I'll come and collect later. No, it's not allowed. I mean, not allowed. You have to go through the ECB norms. So, who says not allowed? Friends, philosophy of FEMA, nothing is not allowed. Everything is allowed, but subject to permission of special or general permission of the Reserve Bank of India. Okay, justify the transaction commercially, take it, do it. We'll permit it. So, transactions on account of external commercial borrowings are governed by Section 6(3)(d), which is again capital account transaction. ECBs are commercial loans raised by eligible resident entities from recognized non-resident entities and should conform to parameters such as minimum maturity, permitted or non-permitted end users, maximum all-in cost ceiling, etc. The parameters apply in totality and not on a standalone basis. Whatever you are borrowing, totally it has to cover, not one point, one time. So full, till the life of the loan, you have to comply with the parameters. So, framework is there. It is there in your material also. I'm only taking you through it. Not my own, because many times I use my own diagrammatic representations. This is not such. It is here. There in the institute material, I'm doing it. So, there are many forms of ECB. You have the foreign currency denominated ECB. That is, that borrowing is in any freely convertible foreign currency. INR denominated ECB. That is, it is borrowed in INR and repaid in INR. Can come, if somebody is willing to do it, fantastic. How nice. But normally, foreign bank will lend only in foreign. He will say, boss, you take it in euro, give it back in euro. Now you will ask me, why should I go to a foreign bank when my own friendly neighborhood State Bank is there? Because State Bank will charge you 8.7%, whereas ECB to 3.3%, 2% plus LIBOR plus something, 2.5%, 3%. 3%. I would love to borrow tomorrow, sir. You can. But remember, you are also going to have one more problem. What is that? Currency. See, you borrowed 3%, Baba, but you have to take into account the currency fluctuation also. 5 years later, what will be the currency? You have to predict. That difference also you'll have to pay. Nah, that will be part of your cost. See, when you borrow, you'll get so many euros. When you're repaying, you'll pay more euros. Nah. You will not pay more euros. You'll pay more INR for that same euro. That difference is what? Loss. That loss also. In addition to interest, this loss also you have to take it up. Which is why ECBs need not just awareness of financing, but also foreign currency fluctuations. So you should, usually I'll tell you the secret of what is happening. You take ECB, no problem. What they will do generally is 40% of that ECB will be parked abroad. They will actually use it abroad or they will use that, keep it abroad and start buying and selling that currency. Hedging. They'll start hedging. They'll start taking opposite positions. So that when the market, so they keep on making money on that, and that will keep accumulating. So that will make up for any loss on the exchange this time. That is the best way to do it. If you take the entire amount and put it here, and then later on you will have to earn it from your business and give it back. So that exchange currency fluctuation load also will have to come from your business profits. If you can do that, great. If your business is giving you that type of ROI, great. But very difficult, sir, because in the long run, currency fluctuations are pretty costly. If you work it out into an annualized rate, it's not cheap. Okay, it's not cheap, given the currency. Okay. Anyway, as I told you, I'm moving unnecessarily into an area which is not my area of expertise, possibly. You guys are going to become ultimate experts in finance. You guys are going to join large, big corporates as finance guys and, sort of be there. So, but whatever you do, remember, bottom line is common sense. Okay. I was recently watching a movie. I think one of our students only referred that movie. I've not watched it at all. I'm surprised that I didn't. The long shot or the big shot, something like that. Forget that. So one of the students only in this class only, he referred it in the question query pad. And it so happened I had missed that movie. I didn't watch that movie. I started watching it. Very fascinating. Very fascinating. Especially where whenever a complicated so-called abbreviation will be used, immediately one chef or one society lady will be sitting in a bathtub and she will be explaining that concept in simple terms. I loved it because I used to do that when the subprime crisis came. People, exactly, subprime itself is a bullshit word. Subprime. What is subprime? Shit bonds that nobody can handle, that nobody will touch with the bath bowl, getting mixed with AAA plus bonds. So the point here is, sometimes we use these abbreviations and these stuff, sometimes without even knowing what we are talking. Okay. Or sometimes we know what we are talking. We know it's bullshit. So we hide it in this type of terms and we try to convince the other party that we are more knowledgeable than we are. I mean, I don't mind. If you like to do that, do it. But be careful. Always it won't work. Sometimes common sense works better. When you explain the reality to the client and tell him, hey, this is what it's all about. Don't worry, FCB, CCB, ECB. Basically, this is what they're talking about, boss. Are you ready for the game? I've got a lot of clients who are great entrepreneurs. They come to me, they say, Srikanth, this is what I want to do. What can I do now? I want to obey the law. Advise me. I give them fantastic support and I tell them, do this. They're happy. They go, do it properly. They do ethical business. They do huge profits. They earn a lot of money and that profit is not wasted in paying penalties and bribing government departments and all that. They enjoy it. Okay. They give it to their shareholders or they take it home as salaries. So this is the secret of, good business. No bullshit business. Okay. That works. Many clients love that no bullshit attitude because they hate chartered accountants who give them bullshit, jargon. They say, this guy does talks. I don't understand, Srikanth. When you talk, I understand what you're saying. Why is this so? So I'm not boasting. I'm saying, why don't you develop that skill of explaining a complicated topic, simple terms, so that a man who like me, who is uneducated, can understand. Okay? You don't have to be a chartered accountant. Everybody cannot be a chartered accountant like you. Ordinary people, maybe me also will be there. Help us to understand what this is all about and how it will impact on us and what we are supposed to do to protect ourselves. Okay? Chalo. Now, coming to the point at last. Okay? Yeah, the big shot. Aniket, Michael Burry, correct. Fantastic story. I loved watching it. I couldn't watch it fully because of no time. I'm sure I'll finish watching it. Thank you. If it was you who referred, thank you, sir, for referring that wonderful movie to me. Okay. Now, coming to the point, ECBs can be designated in foreign currency or they can be designated in INR. Loans, in what form of ECB can be there? You can have bank loans, floating, fixed rate notes, bonds, debentures. You go abroad and you issue debentures, no problem. Trade credits beyond 3 years, FCCBs, FCEBs, and financial lease. You will ask me, why doesn't the ADR, GDR come here? No, it is FDI. Okay, it is part of equity, not part of loan, debt. Balance sheet position is different. That is why. This is debt. Okay. So floating fixed rate notes, FCCBs, FCEBs, okay. Foreign currency convertible bonds, okay, and things like that. And financial leases also come here. In INR, you have again bank loans, floating or fixed rate notes. What is a floating or fixed rate note? Simple. It is nothing but a debenture, or it is nothing but a promissory note. You borrow money and you say, I will repay in so and so time. Rate of interest, you don't fix it. Suppose you fix it and say rate of interest 3%. Dangerous. Don't do that. You say rate of interest, LIBOR plus 200 basis points. That's all. So every 3 months we see what is LIBOR. And then we fix that, peg it. It keeps going up, down, up, down. On an average, in a fixed floating rate, you will be better off than in a fixed rate. Because if you want a fixed rate from a bank, they will always give you a slightly higher rate. I have experienced it many times. When you do a floating rate thing over the lifetime of the loan, you actually pay lower on an average. But in a fixed rate, you pay more. Again, subject to correction, because I'm sure you've done. My experience has been that. Take a risk. Floating rate is a risk. Fixed rate, you think that you are risk mitigating. But sometimes you might end up carrying a thing that you cannot. Then you might, at that time, then you will have to change. You will have to foreclose. You have to go again. Why? Floating, you can keep floating. If you still feel that you're losing in the floating, you can always renegotiate, go there and talk. Whatever. Anyway, trade credits beyond 3 years. Financial lease, also plain vanilla rupee denominated bonds. Plain vanilla means ordinary, that is simple. Coupon rate, repayable within so and so period. No premium, nothing. Okay. Now, who are the eligible people? Very, very important. All entities eligible to receive FDI. So all companies can do it. Anybody who is entitled to receive FDI, companies can have. Also, port trust, units in SEZ, SIDB, EXIM, they can all borrow. All entities eligible to raise foreign currency ECB. Any of these people, plus registered entity engaged in microfinance activities, like registered not-for-profit companies and all. See, this is mainly to support the startups. Okay. Mainly to support the startups. What happens? Startups cannot handle the foreign currency thing. So that is usually mitigated by a bank or a microcredit corporation, and they get that in INR terms. So that they handle it in INR and they do it. Now, I told you, you can't borrow from anybody and everybody. The lender should be a resident of the Financial Action Tax, FATPs. He should be an FATP signatory or the International Organization of Securities Commissions. See, our SEBI is a member there. For example, you have the SEC in the United States, the Securities Exchange Commission. The body where all these fellows belong is IOSCO. So this country, that lender should be a member of IOSCO, or he should be a resident of a FATF country. Okay, so which means Brunei is out, my dear friends. Brunei is out. Antigua is out. You can't borrow. Okay, I think Hong Kong is also out, if I remember right. Hong Kong was also blacklisted by, or at least grey listed by the FATF. I have no doubt, but to my knowledge, yes. Hong Kong, I remember having seen Hong Kong in that list. I was surprised when I saw Hong Kong, because Hong Kong permits you to do business there without paying tax. Provided you don't do any business in Hong Kong, you can have an address in Hong Kong and you can do. So they act as a sort of tax haven. Not heaven, heaven. Okay, so on and so forth. Anyway, multilateral and regional financial institutions where India is a member country will also be considered as recognized lenders. Individuals as lenders can only be permitted if they are foreign equity holders or for subscription to bonds, debentures listed abroad. So, if you already have individuals who are your equity holders, they can lend. Okay. Only that case. You can't, as I told you again and again, I keep repeating. Why? Because if you go to Amsterdam, there are excellent Jews who will lend you good money, but without asking any questions. But very dangerous. Don't do that. Foreign branches. Subsidiaries of Indian banks are permitted as recognized lenders only for foreign currencies. Foreign branches or subsidiaries of Indian banks. Again, what is the logic, boss? They will take the money in that country and they know how to hedge the risk. They will take care. And that foreign exchange, what they will do, sitting in New York, what Indian bank, New York branch, what he will do, with that, all that money he has got from US, he will push it into India through a ECB, right? He will syndicate a ECB fund. Okay. Minimum average maturity period. Very important. MAMP for ECB will be 3 years. Minimum average maturity period. Call and put options, if any, should not be accessible prior to completion of MAMP. Call or put, either when the lender tells, call. When the buyer tells, put. No problem. Lender, borrower, put. However, for this mentioned below, the MAMP will be prescribed therein. So this alone, if you know. ECB raised by manufacturing companies up to 50 million or its equivalent, minimum 1 year they are giving. So 1 year later, if you want to repay, you repay. ECB raised from foreign equity holder for working capital purposes, general corporate purposes, or for repayment of rupee loans, 5 years. See, one thing I'll tell you, I'm not against ECB. Oh, no way. ECB, if you know how to handle the country risk, the currency risk and the interest rate risk, and utilize it here and get a ROI better than that risk mitigated rate, then you are a king. You are the king, ultimate. You will make huge money. Okay. But you should know all this. So ECB raised for working capital purposes or general corporate purposes. On lending by NBFCs for working capital purposes or general corporate purposes. On lending means NBFC will borrow in foreign currency and again will lend to their clients for working capital purposes or general corporate. General corporate could be expansion. Means expanding, building a new facility, refurbishing, whatever you want to do. Take money, enjoy, do your business. ECB raised for repayment of rupee loans availed domestically for capital expenditure. On lending by NBFCs for the same. Repayment of rupee loans availed domestically for capital expenditure, 7 years allowed. Where you are borrowing for working capital or general purposes, 10 years. Okay, just see that the MAMP is slightly higher than 3 years. Other than this, it is all 3. Other than these categories, 3 years. Okay. ECB raised for repayment of rupee loan, etc. ECB raised for repayment of rupee loans availed domestically for purposes other than capital expenditure on lending by NBFCs, 10 years. So this is something granular you might want to keep in mind while you prepare for your exam. Framework. The term all-in cost includes rate of interest, other fees, expenses, charges, guarantee fees, whether paid in foreign currency or Indian rupees, but will not include commitment fees, prepayment fees or charges, withholding tax payable in INR. Okay. Commitment fees. By now, your knowledge of finance should be pretty good. Final level student. When a bank wants to lend to you, they will say, we sanction so much. For example, $2 billion. They'll say, you have to avail the $2 billion. In case you do not avail 2 billion, boss, I will charge you some 0.05% or 0.06% as, or 0.6% as commitment charge. Means throughout the year, if you don't use it and keep it idle, you will still end up paying me this much. Why? Because I am keeping it for you. Tomorrow you ask me, I have to give you. I'm not. So the portion I'm holding it for you now. To that extent, I need to be compensated. So commitment fees. Now the problem here is, how do I know what is the commitment fees at that time of thing? Yeah, it may come, it may not come. Therefore, they say that need not be included in all-in cost. This was a doubt raised by a student. That is why I'm going deep into it. So how can I know commitment fees? What it may not be there also. So how can I? So at the time of applying for the ECB, I don't know. Yeah, terms are there in the ECB, in the loan agreement. It is there, but I may not. But interest definitely I'll pay. Now the amount I'm going to borrow, I will pay. Other fees I will pay if I'm incurring it. Any charges and all that will be included. Okay. Prepayment fees again. When I prepay only, I'll pay. How do I know whether I'll prepay or not? So now I cannot consider it. I cannot be considered for at the time of ECB approval. That is not part of all-in cost. And withholding tax, that is TDS, not to be considered. Net of TDS you take it. Because India gets it now. We get it back as income tax rate, so we don't bother. Now this has been pegged at a benchmark rate, which means if you are borrowing in LIBOR, London Interbank, Singapore Interbank, whatever rate, Hong Kong Interbank, whatever interbank you're taking, plus 450 BPS spread, okay, is the limit. You cannot go above that, right? Basis points, okay, sorry. I should not use abbreviations. Yeah, okay. Many times, when I attend seminars and workshops and all, people use abbreviations. Yeah, Mr. Shrikant is that. So immediately when the guy is talking something else and somebody else and all, quickly I'll go to Google, find out what that is and come back to it. It's simple. Today, luckily, I have got the greatest of all teachers, Karlo Dunia Mutti Mein, in my hand. The greatest of all teachers. See, no teacher can do it for you. 24/7, readily available, listening patiently to all your nonsense, answering any question, however stupid, any number of times. Who else can do this? Google. So please don't avoid using Google. That is why, when students ask me some questions in especially B schools, I go there and they ask me some questions. I keep asking them. Don't make me do Google's job. This is a question Google can answer. Only when you don't understand something which is beyond Google, come to me. Means Google cannot answer complex questions. Google cannot answer questions that need human experience or interpretation. Rarely Google will answer unless somebody has thought about it and put it in a blog. Sometimes, if you're lucky, you'll hit. Even then, still, it takes a little time. Okay. Prepayment charge, penal interest, if any, for default or breach covenant should not be more than 2%. That is, the prescribed amount cannot be more than 2%. Over and above the contracted rate of interest on the outstanding principal. So, if it is 3% plus 250 basis points, then another 2% you can have above that. Beyond that, you cannot. Okay. This all-in cost is also a very important and interesting point. You may want to remember it. End users, negative list. You cannot use ECB money for these things. We've already seen some of the guys, real estate. You can't take ECB and invested in the share market. Sorry, sir, no. For that, there is another route now. You want to bring money that way, you come through the foreign portfolio investment route. It is there. And you bring it in through that route, field monitoring. Investment in capital market, equity investment, no. You borrow, use in your business. You can't further invest it in some other business, no. Working capital purposes, except in the case of ECB mentioned at B and C. Okay. Similarly, general corporate purposes, except in the case of ECB. Loans. Wherever it is permitted, you do. Otherwise, you can. On lending activities, except in the case of NBFCs. Okay. Otherwise, you cannot. For example, you cannot borrow and lend. No. Even to your subsidiary, be careful. This is all frequent mistakes that people do. They borrow, they take the money for ECB, then instead of using it in that business, they lend it to a subsidiary. They say, sir, my subsidiary only, sir. Sir, please. In FEMA, don't speak logic. Okay. So under the aforesaid framework, all eligible borrowers can raise ECB up to $750 million or equivalent per financial year under the automatic route. Further, in case of foreign currency denominated ECB raised from direct foreign equity holder, ECB liability to equity ratio cannot exceed 7:1. Okay. However, this ratio will not be applicable if the outstanding amount of all ECB, including the proposed one, is up to $5 million or it's. See what they have done. They said above 1 billion you cannot go now. They said up to 750 million automatically taken. No problem. Okay, is what they have said. So you want to go for approval route cases, the borrowers may approach the RBI with an application in prescribed format, Form ECB. Such cases shall be considered keeping in view the overall guidelines. ECB proposals received in the Reserve Bank above certain threshold limit would be placed before the empowered committee, and the empowered committee will have external as well as internal members. Finally, it will decide and recommend. So when you want to go under the automatic route, you approach the AD category 1 bank with the proposal along with Form 83. Then everything is there. So this is the general concept of ECB. Yes, we have completed the topic a little early. Let me ask you, if you have any further doubts, etc., kindly raise the doubts, if any, that you might have in this case. Only Aniket Jain has raised, and Bonnie Joe, Shailendra Singh worried whether anybody is there other than these people. Anybody is there? You can ask me questions. Okay. If you have no further questions, I would love to stop here. More so because even I'm not a little well, as you can see, my throat is gone thanks to the weather. And I was traveling extensively in the eastern part of our country. I was in Assam. I had an appointment with a couple of rhinoceros in the Kaziranga Park. So I was there. I'm just joking. I went to Kaziranga and Assam, Meghalaya, Shillong, and back. So I caught a very bad cold and a cough. So I'll be happy to stop here unless you have any questions for which I will wait. Okay, Sumit Jain, can invest, not invest, boss. Yeah. See, negative list is given to ensure that ECB money is not put in unproductive sources. Other than that, you can. But where will you put it, Sumit? Curiosity. This is the negative list. So give me an item where you can invest other than negative list. Yeah, thank you, Aniketji. So Sumitji, I'm waiting. Other than this, give me one example what you want to do. Yeah, you can. Other than this, see, basically you can. One more thing, remember, Baba, these are all specifically the purposes are mentioned here. Working capital, general corporate purposes, repayment of repeat loans. So you can't also go beyond that purpose. Within that purpose, you can't do this. For example, you can't say my business is real estate. So general corporate purposes, you can't get into real estate. You can't invest. So yes. So anything else, if it comes to your mind, you tell me, other than this. Okay. But of course, you see, friends, in the longer period, what you will find is India will slowly move towards opening up of all capital and current account. But once we become mature as a country, as our enlightened Prime Minister wants us to become not just a developed country, but a superpower, then once we become a superpower, yes, our foreign capital account also will be opened, which means all this negative is blah, 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 nothing. You bring money, take money, you do whatever you want. That banks will keep accounting what you're doing, except for money laundering, narcotics, drugs, smuggling, that will be controlled. Other than that, business people take, no problem. No need to go to these and fighting and begging them for things. Okay. So I hope, as Tagore said, into that heaven of freedom, my father, let my country awaken. With that, shall we say, note, I will call an end to this class and look forward to meeting you all again on Sunday when we will be taking up another topic in company law before we move on to FCRA and PMLI. Right? Thank you. Bye.